CoreWeave reported their first earnings, and for those that are not familiar, this is a massive AI infrastructure play. And we can see after hours, the stock is down roughly 7.8%. What's more crazy is during the earnings call, the stock peaked at a nice amount, and since the peak, the stock is actually down about 16%. On today's episode, I want to kind of explain my thoughts on CoreWeave, why it is my number two biggest individual holding, and share some of the things I learned from today's earnings call. Let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so the first thing I want to look at is revenue, and revenue was up 420%, driven by strong demand of their clouding platform. Now, before I explain the business for those that might not be familiar with it, I don't think this kind of growth rate is sustainable. I do believe kind of if we look at next quarter guidance, the revenue growth starts to drop down to like 100 and something percent on the year-over-year growth. So I don't believe this 400 or anything in the triple digits is going to continue to be at these levels, but I do believe it is going to be a massive growth stock overall in forms of revenue, high double digits for a long time. Just triple digits, like we've seen with any company, I don't believe that is sustainable, like I mentioned. Now, for those that are not familiar with CoreWeave, what they do is they kind of get AI chips. They build the AI infrastructure, and then they rent out this AI infrastructure. And actually, they do it in the reverse order. But overall, with AI becoming such a huge play, and maybe kind of big data center companies not wanting to invest all the money on their own, they'll rather rent out, just like the difference between owning a car and leasing a car, especially with technology that might become obsolete. More people and more kind of big tech companies are thinking of leasing, because in the short term, it does require a lot less capex, right? If you're leasing something opposed to owning and buying it outright. There's also a lot of other pros there. But CoreWeave has a lot of major customers like Microsoft, like OpenAI, that rents them out. Now, kind of their overall mechanics, and this is a general understanding of their business model. It's not how it always goes. But first, they kind of contract a signing with a customer. Hey, look, in the future, we're going to need some type of this type of GPU solution, this type of AI infrastructure. We're going to get an initial prepayment out of it. And then from that initial prepayment, they're going to start the purchase orders for the system. Now they're going to end up buying GPUs for and other infrastructures. It's going to take a few months to install that. And after they install it, then kind of that contract begins and the AI cloud goes live, and they start to get that monthly contract. Now, one of my favorite things with CoreWeave is they do tend to follow more in the big players of contracts. They tend to have more multi-year contracts opposed to short-term contracts, and that is very profitable compared to some of the other businesses that might be doing this type of solution. And they do have some big players. Some other things that I am pretty excited about CoreWeave, and let me kind of explain my position. For me, I am in CoreWeave. My cost basis is about $40.40, very cheap. I got it during kind of this massive pull down that we've seen in the stocks these past few during kind of the April crash. I didn't kind of get the bottom right. The bottom was around $35.42. I didn't buy it during IPO either. Like I mentioned, I bought it more during the crash. And if you have watched some of my videos, I've done a video in the past where I've talked about my recent portfolio allocation, something I don't do too often, but I did it during this time. Is I wanted to increase my overall investments in the AI market, and I wanted to go with players that I believe can benefit with Nvidia's growth. And I do believe this is one of those players that can benefit dramatically from the AI space. So I feel like this is another way to kind of get exposure to some of Nvidia's growth opportunities without just focusing on Nvidia by itself, as Nvidia is already such a massive portfolio position in my overall portfolio. And if you want to support the channel, first, easily subscribe and hit the like button. I'm trying to hit 75,000 by the end of the year. Second thing is check out whatthechiphappened.com. It is my free semiconductor newsletter. Third is you can go to finchat.io/Jose. Link is down below. And the final thing is you can check out fool.com/Jose. The other reason that I am very bullish in CoreWeave is Semi Analysis, which is a very respectable group of semiconductor analysis, gave CoreWeave kind of a platinum and the only platinum store here. And they gave it for various reasons. First, the way they did the contracts, very, very long term. The ability for them to kind of have and stand up data centers, the kind of reassurance that they have for customers is way better than some of the other players, even some of the cloud service providers like Oracle, AWS, and Google Cloud. So this kind of really gave me an understanding of how strong they are. Now, the final thing, and this is actually going to go here pretty well with finchat.io, but here I'm using kind of their AI tool, and I kind of talk about what has Jensen said about AI factories. And Jensen has talked about AI factories being kind of this specialized computing infrastructure designed to manage the entire AI lifecycle from data ingesting and training to fine-tuning and high-volume inference. So overall, Jensen's vision of AI factories is centered around creating a new type of data center that produces artificial intelligence as commodity, leveraging Nvidia's cutting-edge technology to drive innovation across various fields. And Jose, you might be wondering, Jose, why the heck are you talking about AI factories? These are kind of some new type of data center solutions that are kind of starting to come up. And I do believe CoreWeave, if Nvidia's Jensen is really excited about this, I do believe CoreWeave would be one of those players that starts to build AI factories a lot faster than other players. CoreWeave is also one of those players that gets to have the new chips faster and earlier than anticipated. And they're also able to build up that infrastructure a lot faster, which allows them the opportunity to make these very, very long-term contracts, right? Because if you are one of the leading AI companies and you know CoreWeave is going to get the best chips and have it running as soon as possible, you're going to want to make that contract as soon as possible. And CoreWeave is going to easily kind of charge a little bit more at the early end, opposed to maybe some of those other data centers that are going to be building chips or building their infrastructure later on. So I do believe the kind of partnership that they have with Nvidia, the kind of analysis that we've seen on how well they built up system has made me very, very bullish on the stock. Now, one thing that I kind of want to talk about as well is this is a company that's also going to be investing a lot of money in AI infrastructure. This quarter alone, they spent about $1.9 billion in AI infrastructure, in capital expenditure. Most of it most likely goes into AI infrastructure. If we look for quarter two, that's expected to jump about $3 to $3.5 billion. So even on a $3.5 billion, that's about $5.5 billion in capital expenditure by the first half of the year. Yet this company expects to do capital expenditure of $20 to $23 billion by the end of the full year. That's an extra $15 billion expected in the second half of this year. Now, this really excites me a lot because if this company is expecting to spend $15 billion in the second half, obviously very bullish for Nvidia investors. But more importantly, what really got me excited about this is that this means that they have a lot of demand for AI solutions right now, right? Because AI solutions or these AI contracts, they're all dependent on these massive data center infrastructure plays. So for kind of seeing this second half heavily weighted on capital expenditure, I do believe this company is going to see some massive growth over time. Now, so that gets me very excited about the future growth potential. I actually believe the revenue and full-year guidance that they're giving us here is going to be, it is very weak. I think they're underselling it, and I do believe this company has the opportunity to grow. Now, with CoreWeave, this is definitely an interesting play, right? I mean, it's definitely expensive, $31 billion on what a $5 billion annual, $5 billion by the end of this year. That's trading at about a six price to sales ratio at the moment. And for a hardware stock, that's kind of a hardware infrastructure play that might be seen a little bit expensive. But at the same time, it doesn't seem too bad. It depends on how you're betting on this AI phase. And I do believe their growth opportunity is going to be a lot stronger in the upcoming quarters. But expect a lot of volatility from this stock. Now, during the earnings call, I want to say the earnings call pretty much sucked. It was their first earnings call as a public public company. And I do believe the CEO is very similar like me. He gets pretty nervous. He probably sucks at public speaking, just similar to I do, to me. And it seemed like he was very ill prepared. I don't think he was ill prepared. I think he was nervous, and I think he just needs more kind of public speaking classes, especially for kind of analyst calls and stuff like that. So the earnings call sucked in forms of listening. A lot of ums, a lot of ahs, a lot of blank noise. Obviously, very new company, first ever public earnings call. I'm going to give them the benefit of the doubt. I want to see more. I like more how they are moving along. Now, some other things I wanted to kind of mention is the company in forms of revenue did beat expectations, but more importantly, this past quarter they signed about a 11.9 billion 5-year deal with OpenAI. Again, Microsoft is a big player of them, but now OpenAI is also going to be a big customer of theirs. In addition to a 5-year, OpenAI signed an additional $4 billion contract with CoreWeave after the first quarter ended. Now, OpenAI and a lot of these big players are now expanding globally thanks to that UAE investment. I do believe that's one of the reasons the stock is up about 23% in the past 5 days. And just a quick number. I mean, the stock is down to $62, down 7.8% after hours. But earlier this week, the stock was still sitting at $54. So even after this massive drop after hours, the stock is still up on a 5-day basis and is still up year to date. So CoreWeave is one that I would consider a very highly volatile stock, but one that I am going to be super, super excited about. The final thing I want to talk about is they are expecting to have deployed power by the end of the year, more than double of what their life-to-date deployed power is on their platform. Again, I mean, we did see kind of that massive capital expenditure for the full year of guidance. And I think because of that, we do see some huge growth potential coming here for CoreWeave. So again, I'm pretty excited for the company. I do believe it's going to be very volatile. I'm not saying this is the next Nvidia, but I do believe it can grow and become a massive player in the AI infrastructure space. And I do believe right now is the type of market to enjoy it, but this is going to be a crazy ride. I wouldn't buy at these levels. Again, I might be cost basis bias, as I did get at $40.40, my overall cost average. If I was to enter right now, it would be more of a dollar cost average opportunity for sure. But the market always gives us opportunities. I mean, there's the trade wars, there's random black swan events that happen almost every other month, it seems nowadays. So this is one that as an investor, I would be patient if I really wanted to buy a position at these levels. So take care, have a good day, and see you all next time.